All right, welcome to The Explainer. Today, we're diving into something huge. Why China is purposefully hitting the brakes on its legendary economic engine. What are they trying to build instead? Let's get into it.
For decades, China was all about mind-blowing, often double-digit growth. It was just a given. But now, the forecast for 2026 is a much, much smaller 4.2%. But here's the kicker. This slowdown, it's not some accident. It's a deliberate, top-down plan. We're talking about a complete re-engineering of the world's second biggest economy, from the ground up.
So what we're really witnessing here is the end of an era. China is making this huge strategic pivot. They're moving away from that growth at all costs mindset and shifting towards something they call high-quality development. Okay, so what does that actually mean? Well, think of it this way. They're ditching the old playbook, the one that said just build more cities, more factories. Now, the new game is all about sustainable, high-tech growth, a total flip.
But you gotta ask, why the huge change? Why fix what, for a long time, wasn't broken? Well, it turns out the old model was creating these massive cracks in the foundation, risks that threaten the entire system.
And the biggest crack of them all, it's the property crisis. This thing accounted for nearly a third of China's GDP, and now it's become this huge, single biggest risk to the entire economy, a massive drag on growth.
So to really wrap your head around this, get this. In some of China's smaller cities, they have enough empty, unsold apartments to last for 40 months. That's over 3 years of inventory just sitting there. We're talking about a colossal oversupply problem. And you can see the breakdown right here. While the big Tier 1 cities are weathering the storm a bit better, it's those smaller Tier 3 and 4 cities where the crisis is just off the charts. They're facing a critical glut of empty homes.
And this has a massive knock-on effect. You see, when the real estate market collapsed, it basically starved local governments of their main source of cash, which came from selling land. So what happens? They get trapped under this mountain of debt, a huge one, to the tune of $18.9 trillion.
Okay, so things look pretty dire. What's the plan? What's the solution? Well, it all comes down to a comprehensive new blueprint, and it's all laid out in their upcoming 15th five-year plan.
At the very heart of this new plan is this phrase you're going to hear a lot: new quality productive forces. It sounds complicated, but what it really means is they're shifting their bets. They're betting the future on breakthrough technology instead of just more concrete. And just look at the list of industries they're targeting. We're not talking about small improvements here. Quantum tech, 6G, nuclear fusion. This is a full-on, state-led push to dominate the next generation of global technology. The ambition is just incredible.
Right, so a plan this big, this ambitious, it needs more than just a list of goals. To actually make this happen, Beijing is having to fundamentally rewire the very mechanics of its financial and industrial systems. The whole engine room is getting an overhaul.
A perfect example of this is the Digital Yuan. This is a landmark change. It's going from basically a digital version of cash to a full-fledged, interest-bearing digital currency. This is a game changer. It means the state can encourage people to use it, and it gives them way more oversight and control over the flow of money.
And they're also playing traffic cop with credit. Look at these numbers. While overall loan growth is slowing way down, they are absolutely flooding strategic sectors like green loans and elderly care with money. They're picking winners and pouring fuel on those fires. And then there's this fascinating concept called involution. It's basically a race to the bottom, where companies get locked in these self-defeating price wars and nobody actually wins. To stop this, the government is launching an anti-involution campaign, trying to stamp out this wasteful competition in key industries like solar and steel. So when you take a step back and look at all these different pieces, the tech push, the financial rewiring, the anti-involution campaign, they all add up to one grand strategy. And that is to build a more resilient, more self-reliant economic superpower. So if you remember one thing, it's this. China is pulling 3 huge levers to make this transformation happen. First, they're aligning everything with their big 5-year plans. Second, they're swapping out that old property-driven growth for these new quality productive forces. And third, they're re-engineering their money system. It's a huge trade-off. They're giving up some short-term growth for what they hope will be long-term control and stability.
But, of course, the big question remains. Can this grand experiment actually succeed? Especially in today's contested global landscape.
The success of this whole thing is far from guaranteed, and its outcome, well, it's going to tell us a lot about the future of global economic power.